Good morning. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Okay, this morning let's talk about the equity markets and a play we have on the equity markets. Okay, well this morning it's a little bit of a Monday panic morning. We're seeing a lot of selling going on, and we'll get to those reasons right away. But let's take a little step back. We still view the equity markets as being in a pretty good uptrend. Where last Monday we're coming in a cautious uptrend. However, the action over last week, where we saw the S&P and the NASDAQ break into new highs on Wednesday on very strong volume, and it kind of hung around those highs Thursday and Friday, tells us this market still has room to go. Okay, so now this morning, what we have is gold's down $100. China's first quarter GDP came in at 7.7%. Everyone's looking for 8%. So we have a little bit of disappointment there. And also from the National Association, the Home Builders Index came in a little soft at 42. That's a drop down from 44. However, the reason I call this a panic selling, that's still up 75% from a year ago. Okay, so now what levels should we pay attention to? On the S&P 500, resistance is going to be right at about 1600. So for the market to move higher, the S&P's got to work through that, and that may take a little bit of time. However, the S&P is staying above that 1573 level. That should be a pretty good support level. And if not that, down to the 1550, 1530 level, the S&P starts breaking down there, and perhaps the market will turn around. On the NASDAQ, resistance will be right about that 3300 level. First support will be about 3267, and then we can take it down to the 3200 level. Now, the market's selling off this morning, as I mentioned earlier. It's mostly due to the gold sell-off, so we might see some margin calls, so you might see some selling in equities as well. However, the sell-off on gold really shouldn't be that much of a surprise. Gold has been in a downtrend. And if you take a step back even further, gold has outperformed equity markets since about 2000. However, in 2012, this started changing where the equity markets started to outperform gold. And it looks like that trend is going to continue going in the future. So again, that gives us reason to be a little bit more positive on the equities right now. Now, as the markets were hitting new highs last week, the equity markets, we did get confirmation from the financial sector. That was really good, the XLF. The Dow transports were a little bit off, but they're still not trending down. And of course, the home builders are still muddling around, and they're down this morning, of course, on the Home Builder Association Home Builders News. Now, the consumer discretionary sector is doing very well, and that's being led by the retail stocks. We talked about the apparel group last week, and of course, we have the retail restaurants doing very well. Names like Bloomin' Brands, Panera Bread, Buffalo Wild Wings, Chuy's Restaurants. So you have strength in the consumer discretionary sector. So keep your eye on those sectors. That's going to tell you which way the equity market may go. Now, the play I have for you is based on a construction. It's United Rentals. Symbol is URI. Basically, over the last 2 quarters, URI reported earnings of about 47% and up 55%. Sales came in at about up 71%, up 67%. Mutual funds have been accumulating this stock over the last 8 quarters. Growth estimates for the next 2 years are up about 30% per year. Now, URI topped out at about 50 last year in April and corrected pretty far down to 30 level. It came back up to got up above 50 level over a few weeks ago. It's been moving sideways. However, why I'm pretty bullish on the stock is if you take a look at the weekly charts and the weekly ranges, it's been closing in the upper half of most weeks over the last few weeks. Now, last Thursday tried to break down and got knocked down. And of course, this morning it's got knocked down to about the 51, 52 area, which is probably a pretty good place to pick that up because, of course, they have nothing to do really with residential construction, very little. Most of their business comes from non-residential construction and infrastructure projects. So the company sees things going very good for them going forward. Now, tomorrow morning, URI reports earnings. So if you don't want to buy anything before earnings, that's understandable because you don't want to play earnings roulette. However, analysts are looking for 48 cents EPS for the quarter. And that should be an increase of about 33%. They're looking for sales to come in at 1.1 billion. That should be a 69% increase. So you might want to wait till tomorrow morning, see how the numbers play out, jump on that. If it starts falling below the $48 level, the trade probably won't work. Or you can wait till it tries to break out past that $56 area and take the trade on there. As always, let price and volume be your guide. This is George Kachuk, or RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading day.